Okay, I think we're going to go ahead and get started. So welcome everyone. Thank you for being here today for our panel discussion focused on InsureTech. I'm Kathleen Devlin. I'm an insurance managing director from Accenture, and I'm going to be moderating our discussion today. I have a few announcements to make before we get started. The first one is Fintech South. So Fintech South has some new dates on June 14th and 15th. If you're interested, you can take a look at fintechsouth.com to get some more information. Also, we have a website, georgiafintech.com. It's also a great resource. It lists a lot of Georgia fintech companies, acquisitions, capital raises, and other research. And we have an additional event coming up in February 24th. We have TAG's annual innovation. So that's where we share updates and success stories on some of the exciting startups that have emerged from TAG. So a lot of cool new events that are coming up. So if you're interested, take a look. I think you can also take a look at the TAG website as well. Now I would like to introduce our panelists. So our first panelist is Bharat Rajaram, and Bharat is a managing director and CFO of AFLAC Global Ventures. And our second panelist is AJ Fang. AJ is a principal at Assurant in the venture space as well. So welcome to you both, and thank you so much for being here today. We're going to start off today with a question related to food. I know everybody's probably pretty hungry and thinking about food over lunch right now. So the first question is going to be, what is the most interesting food name for a company that you've invested in or InsureTech in general out there? So I'll start with Bharat.
Well, thank you. That was perfectly timed for lunch. But you know, it's interesting. We were just discussing this before the panel started. But you know, insurance companies have had this history of using or co-opting animals as their logos. So the duck for AFLAC, the gecko for the Geico mascot. InsureTech seemed to have gone with food. So you know, if you're a salad person, I guess you could go with carrot. You've got other kinds of drinks, other kinds of food groups in there. My favorite is the dessert. So it's a toss-up between pie, marshmallow, and cake. And I guess just by a little bit, my favorite would be pie. Now, just for full disclosure, we've not invested in any of them.
Thanks. Great. Thank you, Bharat. AJ, you're next.
Yeah, so and thank you, everyone. Great to meet everyone today, and looking forward to the discussion. I gotta say, given that I come from a PNC world, Honeycomb, which in the landlord insurance and HOA insurance is probably one of my favorites.
Okay, great. Thanks, guys. Just to give you guys a little bit of perspective on the agenda for today and how we're going to go through this session. We're first going to start with Bharat giving some of his perspectives on InsureTech, and that'll be about 10 minutes, and then we'll hand it over to AJ, and he'll give some of his perspectives as well. And then we're going to open it up for a Q&A, and that'll be the rest of the discussion. And the way we're going to conduct the Q&A is through the chat. So if you have a question, you can put it in the chat, and we'll go through those and ask those different questions. You can put some questions while Bharat and AJ are starting, but we're not going to go through those until we get into the second half of the call. So without further ado, hand it over to Bharat for your perspectives on InsureTech.
Thank you, Kathleen. Again, if I go over, I don't think I will. I don't think I want to do 10 minutes of a monologue here, but if I do, please hold me back.
Definitely.
So very nice to be here with all of you. In terms of perspectives on InsureTech, so maybe I'll just take a step back, talk about what InsureTech is, why is it a thing? Why are we talking about it today? And then what AFLAC Ventures and AFLAC is, what are we doing about InsureTech? So InsureTech, I think the best way to think of it is technology that improves existing insurance products, business models, architectures, the customer experience, or actually enables or creates new models, brand new ones. And so it's very similar to what's happening in the fintech space when you think of the financial services world, how the fintechs have upended that entire industry. And for a little bit of color around you know, funding and such in the space. So 2021 InsureTech funding was in the range of $12 to $15 billion globally. In excess of 450 transactions, and double-digit transactions raising mega rounds, meaning more than $100 million in round size, not the valuation. When you contrast this with something like fintech, so fintech the total money that went into fintech was about 90 to 95 billion last year. So by a factor of, I would say, 6 or 7. The number of deals, a few thousand deals, as opposed to the 400, 450 that we saw with InsureTech. So there are parallels, and InsureTech today, I feel like, is where fintech was about 5-6 years ago, in terms of its maturity, in terms of the interest, in terms of the funding that is going into it. Now you're adjusting, of course, for how round sizes have changed over time, how valuation has changed over time, of course. But that's the general context of InsureTech. The other thing that is noticeable about InsureTech is the extent to which insurance companies, corporates, are engaged in this ecosystem. So in AJ and myself, we are, just two representatives, but pretty much every insurance company of a reasonable scale and size has an innovation and a venture arm that is out there looking at these types of InsureTech opportunities, startup opportunities, both to partner and to invest. So that's the background to InsureTech. But why are we talking about it today? Why is it a thing today? And to understand, InsureTech, you'll have to go a little bit into insurance and the history of insurance. So insurance as an industry, historically has lagged behind others from an innovation perspective. When you think of customer experience, when you think of, policy fulfillments, a lot of times you still encounter old world methods, paper. You encounter an agent. Insurance companies have found it difficult to change their methods, to change their approaches. And by the way, this sort of, I won't call it lack of focus, but this sort of de-emphasis of innovation is really a feature of many regulated industries. You think of banking, you think of airlines, you think of telecom. These have all been, prior to deregulation of these industries, they were all, old world, not known for innovation, and exemplars of bad customer service. And in the insurance industry, I would say some of that is clearly the effect of being in a regulated industry with, high barriers to entry. But then you think of underinvestment in technology, right? Historically, why would you invest in upgrading your technology and your customer experience if that was not a need in the market? And to the extent that there was competition, it was price-based, right? So everything was, if you think about the P&C world, and you go back to Progressive having their little banner where you could compare your quotes with 5 other insurers, it was all about price. It was not about service. They were not telling you about how quickly they could deliver your policy or how quickly they could pay your claim. It was really about how much you're paying upfront. And together with all of this, you had a limited interest in customer engagement. Insurance was you engage with the customer twice, once when they bought your policy and then when you paid your claim. And that was about it. There was nothing in between. And so those were historically some of the problems that plagued this industry. And fast forward to today, or maybe even the last 5-10 years, what has changed? There's clearly a high degree of consumerization, and this is across industries, across markets. People want to have choice. They want to get good service. They want to, they want value for their money. And it's not just about, paying a lower price. Couple that with the rise of the millennial generation. And oftentimes you hear, facetiously people referring to this as the instant generation or the impatient generation. But look beyond that. What they are forcing businesses to do today is to compete on more than just price. You're talking about customer service. You're talking about the value that these companies bring in their products and services. The other thing that millennials are really comfortable with technology. So they have grown up with technology. They don't think highly of sitting in front of an agent to buy insurance. That's just not a thing. Why wouldn't you be able to buy it off of your cell phone or your mobile device? Connected to that, you have social media, right? So you have, to the extent to which, social media has permeated every aspect of our lives. And think of how quickly a bad experience gets broadcast on social media. So now if you have a claim denied for a bad reason, that could go viral pretty quickly. Or you have a bad experience with a customer service rep. So now corporates are forced to think of how to enhance their value proposition. How do they improve their service? How do they be a How do they present a better face to the customer? And then the one big thing is risks, new risks that did not exist 10 years ago. So when you think of the pandemic that we're living through today, think of all the cybersecurity issues, the threats that we've seen over the last few years, climate change, so all the wildfires, the natural catastrophes that you've seen across the world. And then when you think of some of the other developments, you have autonomous cars, self-driving cars. What does the insurer insure in a self-driving car? It's not the driver, clearly. Is it the manufacturer of the car? Is it the technology of the car? So you have these new risks that did not exist before. And then coupled with all that, today you have enormous quantities of data available. Every aspect of people's lives, whether it's the financial data, personal data, health data, those are all available. Some are private, some are publicly available. But there is data available, and there are resources, capabilities, both in terms of computing capabilities and the analytical brains to make sense of that data. So what you have at the end of the day is this perfect storm of the need for innovation, meeting the capabilities, resources for innovation that are coming together now, which is why there's so much happening in the world of InsureTech. So more to come on as we go through the Q&A. I'm sure there'll be questions. Very quickly, I'll touch upon what AFLAC Ventures does, and then I'll hand it over to Kathleen. So at AFLAC Ventures, our mandate is really to keep an eye on potentially disruptive technologies, trends that could impact us, and then identify the ones that we could partner with, invest in those that we actually believe in, that we have conviction in, and then support those investments over time. So our CEO, Dan Amos, likes to talk about Netflix and Blockbuster, for those of you that remember Blockbuster back in the day. What if Blockbuster had this little team that was out there and they saw Netflix? They could have clearly said, no, we're not going to invest. But what if they had invested? What if they partnered with Netflix? You might still see Blockbuster around today. So the net story here is, at AFLAC, we believe in being able to co-opt and partner and work with these disruptive technologies and innovators that are out there. And that is our mandate. So at our core, we are a $400 million venture fund. And our mandate is to invest in InsureTech, health, and Fintech in opportunities that align with AFLAC's interests. We started this fund back in 2016 as a $100 million fund and have grown it 4 times over in the last 5 or 6 years. Along with that, we've also expanded our investment footprint. So we started being more US focused. Now we're much more global and we're stage agnostic. But in addition to the venture fund, we also run a program where we allow our business units to partner with startups. It's called our Venture Labs. And it's an interesting program where we fund these projects, we manage them. So business units that are interested can work with these startups and potentially develop new solutions. And then lastly, our third piece is incubation. So we manage an incubation platform within AFLAC for internally generated ideas to be able to nurture them and grow them into viable businesses. So that's my 10 minutes worth. Kathleen, so I'll turn it back to you.
Great, thanks, Bharat. I thought that was a lot that you packed into your 10 minutes, so great job. I think going from the price focus of insurance to where we are today with how do you engage your customer, some of the technology expectations, and then some of the cool things that you guys are doing at AFLAC. I think there's going to be a lot of questions on this as we get into it, but it really interesting work that you guys are involved with. AJ, I'll hand it over to you next.
Yeah, and thank you, Bharat. That was it's going to be very difficult to follow that that 10 minutes of insights on InsureTech. But I thought I'd take a different approach, and rather than talk about the broader market and talk about what is InsureTech, I want to go a little bit deeper in terms of some of the investment thesis that we have around InsureTech and some of the I would say secular tailwinds that we see, and then some of the changes where us as investors are focusing on going forward into 2022. So I'd like to break it down into a couple of things. So I think, to me, the biggest investment themes within InsureTech, and first and foremost, probably distribution, right? And as Bharat mentioned, historically, insurance has been sold in a very, very different way than what it is today. You have MGAs, you have agents that are out there helping you sell for like State Farms and all states of the world. But as we continue to shift and pivot towards a more digital economy, and then people are getting more savvy with technology, we see more point of sale insurance purchases, right? And you see companies, embedded insurance is one of the hottest topic in the market today. If you look at companies like Dealer Policy, where historically insurance are sold that you go to Progressive, you go to Geico to look for insurance policy. But now, hey, when you buy a car, can I bundle insurance with it? And can I get to the consumer at point of sale? That's where they're most likely to spend and buy the product, right? And at the same time, you see other areas where, I don't know if you guys are familiar with Updater, which is a moving services company for multifamily home. And what they're doing right now is also adding the insurance piece. Hey, when you move, we'll move your insurance as well. So it just cut off a lot of, it's fundamentally disrupting how insurance is being sold. And bundling is another thing that is a hot topic in the market. Bundling with fintech products. If you see Chime, Vero, they all start to partner with Hippos of the world to sell bundling products, both that has a component of financial services as well as insurance. And then last but not least, marketplaces and aggregators like Zebra. So you no longer go to your local or your local agent, or you no longer go to a Progressive or Geico's of the world. Essentially, you go to an aggregator and they give you the best rate. So that's something that we need to watch out for going forward. And as a property and casualty carrier, we're always on the forefront of trying to identify those various channels where we can continue to distribute our products, and then making sure that we're not disrupted by some of the new entrants. And that's when Lemonade and Hippo are so successful, because of their direct-to-consumer approach. And the second thing is, I would call it infrastructure modernization, or IT operations. And insurance companies are spending a lot of capital, especially on the cusp of COVID, really looking at how can I automate my call center? How can I automate the claims process? Workflow automation, how can we track different claims within the organization? Digitalization is very important. AI, machine learning, big data. How can I utilize chatbots? How can I utilize data to really enhance my underwriting capability? Those are the things that are very they're up and coming, and there's a lot of activity, especially in the venture market. And the third thing is the outsourcing, like business process outsourcing. If you look at a company like Accenture that's in Atlanta, like that just raised a lot of capital, they're really looking to take the back-end operations, including from TPA all the way down to reinsurance. How can we take care of that as insurance as a service solution for some of the distribution guys out there, right? The agents, the MGAs. And last but not least, blockchain, I think it's up and coming, particularly as this relates to smart contracts and how do we track insurance information. It's still early stage. I think it's in the first or second inning, but there's going to be a lot of activity there, and something that we're constantly monitoring. So just to give you a sense of what we're looking at from an investor's perspective. A little bit on Assurant Ventures. So Assurant, we are pretty much Atlanta-based at this point. Our new CEO just started, and he's based in Atlanta. So we're Fortune 300, about 10 billion revenue. The venture capital group was formed back in 2016 with the goal of finding disruptions and innovations for our parent company. We're off the balance sheet. We're investing about $150 million. And looking at about $25 million on an annual deployment basis. Series A, Series B deals. We've got a couple of good InsureTech companies in the portfolio, including Shore and Buckle, which is partly a Atlanta company. So we're very, very active and bullish on the sector. And typically, last year we made about 8 investments, but this year we're looking to do about the same, if not more. And then our focus is really trying to have focus on financial gains, but also help companies tap into the Assurant ecosystem and really leverage the knowledge base as well as our partners to help the companies that we invest to grow.
Great, thanks, AJ. That was great. I think some of the themes you put in there a little bit different from Bharat, but some overlap. So distribution and the focus on how insurance is actually changing their distribution models is really interesting, I think. And then also just all these different, like even outsourcing BPOs and all this sort of stuff that's starting to happen. It's really interesting for insurance. And yeah, looking forward to all the questions that we're going to start getting. So with that, we will move into the Q&A portion of this. So for everyone that's on the call, if you have questions, you can put them in the chat. And as you're doing that, I will start off with the first one. So as you're evaluating all these InsureTechs and things that are out there, and there's all these new ideas and things, what are the things that you are looking for specifically? Or is there some kind of criteria that you're going through? And I'll start with Bharat for AFLAC.
Sure. So I will caveat what I'm going to say now, but with the statement that these types of deals tend to be opportunistic. Many times you can go in with a viewpoint of what you're looking for, but many times you may end up doing deals that are still relevant, but may not be exactly what you're looking for. But that said, broadly, we look at opportunities in 4 buckets. The first one is distribution and sales, and I know we've talked a little bit about it, both AJ and I. And this is really about how distribution is changing. So clearly, that's a big one for us. The second one for us is product and underwriting. So we talked a little bit earlier about how there's so much data that's available, as well as there's new risks that are coming in. So it's really that intersection of how can we take all that data, how can we underwrite better, and then you've seen these models play out many different times of being able to micro segment your customer base. So how can you offer a better price to somebody that's a better risk? And it's really about that type of analysis. Our third bucket is really more back office, customer service, claims, also some of the horizontals like data and analytics. We've actually made a number of investments as well in that space. So this is a broad bucket, but it's really on how can we make ourselves a better company to our customers. Now for AFLAC, that is both employers as well as individuals, because most of our products are placed through employers into benefit programs, into their benefit plans. The last bucket that we deal with is what we call value-added services. This is really about asking, what else can we provide to you as a consumer or as a customer of AFLAC? And some of the things that we will often talk about for the employers are things like, payroll services or leave and absence management. For individuals, it's about managing their health and wellness. And we define wellness, incidentally, more broadly than just the health aspect of it. So financial wellness is a big component of that. In Japan, as an example, which is a big market for AFLAC, we're actually, we meaning AFLAC Ventures, is helping put together an ecosystem around our products, so our cancer product. As a customer, what else can you get from your AFLAC relationship? So everything from early diagnostics to what kinds of treatment methods are available for you, all the way through survivorship. So those are some of the things that we explore. So we try to put these into one of these 4 buckets as we look for opportunities.
Great, thanks, Bharat. AJ, I'll give that question over to you as well.
Yeah, and we so we look at it from a different lens. So we're very distribution heavy. So Assurant has strong DNA in distribution. We're B2B2C. So we're very focused on how to get to the consumer, whether it's through our business partners or even directly, right? I think ultimately at the end of the day, we're trying to figure out what's the best way to scale our business without spending a lot of marketing dollars. And that's what we look for in startups too. How can you get to, what does the LTV to CAC look like? How do you scale? What are the channels you have? What are some of the end markets? And then even looking at the ability to really do a lot with limited amount of capital. Operational efficiency is very important when we look at startups. And in terms of the sectors that we look at, we focus on, I would say, 5 pillars. Consumer connectivity is a big area for us, just given our position in cell phone insurance. We're one of the largest providers in the world. 8 out of 10 carriers, top carriers in the world are our customers. So anything that has to do with consumer connectivity, whether it's in the home or whether it's reside with your mobile devices, it's super interesting for us. And then we're always trying to figure out ways to increase our attachment with the carriers and spending more and even having new products that we can offer through them. The second business is our housing business, which it comes in different flavors in renters insurance, lender-placed insurance, and flood insurance. So we're trying to figure out ways where, like what Bharat said, operationally, how can we increase the efficiency within our call center? How can we automate the process of consumer interaction as well as workflow management? And in addition to that, again, going back to the topic, you'll hear this a lot from me, distribution is very important, right? What can we do with the PMCs? What can we do with the lenders, the mortgage servicers to increase our stickiness with those companies? And then we have our auto business. So we're one of the largest provider of vehicle service contracts in the world. And anytime you buy extended service contract at the dealership, that's us. We have relationships with over 7,000 dealerships worldwide. And so anything that happens within the dealership, that's very important to us, whether it's a piece of marketing software all the way to the back end, I would call it aftermarket parts and service sales. Those are very, very intriguing for us. Always trying to figure out a way to increase our footprint within the dealership. And then also you have to think about that the whole landscape of car buying and car selling is changing with Carvanas of the world, the Brooms of the world. That's really changing the landscape of how consumer actually go and buy a car. So we have to take that into account, and VSCs might not be so in the same fashion that it was 10 years ago. So those are the disruption and the points that we want to make sure that we're on top of, and also making investments that can potentially leverage and take our business to the next level. And then we have financial services, work with some of the largest banks. Fintech is a big important vertical for us, particularly when it comes to bundling. We're also always trying to figure out ways to attach our products to a financial services product and hence increase our TAM. And in addition to that, we have a gig economy business. So we provide insurance for some of the largest TNCs and DNCs in the country. And our investment in Buckle captured that thesis, right? We need to figure out ways to get to the gig economy drivers and really figure out, use technology to figure out how to underwrite these individuals who are traditionally underserved by the market. So that's what we're looking at in a nutshell.
Great. Yeah, no, that's really insightful from both of you. I think the group on the phone probably has a much better understanding of kind of your businesses and kind of what you're looking for. So that's great. We are getting a bunch of questions in the chat now, so I'm going to just start going through these. So the first one is, how much of your effort is focused on integrating these partners' offerings into your own company's products versus growing the startups in the broader market? So I'm going to flip back to Bharat to start on this one.
Sure. So it's really difficult because the answer to this question depends on the startup that you're talking about. Let me, if I were to paint a slightly different picture, this will help, I think, the group understand. So when we take a startup, there are three possibilities. One, where there's an immediate fit into the business from an integration perspective, whether that's on the back office side, maybe it's in our sales side, maybe it's in our underwriting cycle. So that's let's call it category one. Category two is, maybe there's an opportunity a few years out. So this is interesting to us. We think this plays into the evolution of this industry, but it's not something that we would plug into our business today. And then the third category is exploring adjacencies. So these are not necessarily in our business, but these are adjacencies to AFLAC or to the industries that we operate in, or the markets that we operate in. And so the answer to the question will depend on which category we place that startup into. So category one, immediate focus is let's find the best way to plug them into the business, clearly. With the category two, we take a view of let's keep a close watch with them. Maybe we'll do a few pilots, maybe we'll run a few POCs, we'll get a better sense for what they offer, and then we can teach them something about the market or about the industry, and then prime them for perhaps integration down the line. And then and that's to the second part of that question, that's really helping them grow in the broader market before they get plugged into AFLAC. And the last one is really all about the broader market, where the touch point to AFLAC, the adjacencies that we're talking about, that is something that may materialize down the line. It's not going to be a heavy integration. Value-added services are a perfect example. We're not going to integrate them into our business, but it may be a financial wellness play or a health and wellness play. Yes, we're going to offer that as a service of some sort, but we're not going to integrate that into our business. And that opportunity may be today or maybe a few years down the line. But hopefully that gave you a sense of how we would think about it.
Yeah, and then we take a similar approach to Bharat. Ultimately, at the end of the day, right, we focus on financial returns. So we are less caught up with integrating the business, integrating the portfolio company with the business. However, right, we invest in businesses that we understand in the verticals that we serve, with the intent that we can leverage our business unit to really help these companies grow, right? And then we typically put our investor hat on and try to figure out ways to plug them into the Assurant ecosystem, but that's not always the case. We might not have the best solution in the market. We might not be the best partner in the market, right? Most of the time we invest because of people want our domain expertise. They want to know, they want the relationships that we have with the ecosystem, even if it's not with Assurant. Having said that, there are numerous instances where even if we don't invest in a company, we found companies where we internalize the product and really used it to help with our technology roadmap. So I would say we spend quite a bit of time discovering businesses or portfolio companies that can be additive to our business, but ultimately we are the glue that like we put them in front of business unit and we let the business unit take that conversation. And we focus on the core goal of growing the startup, the investment, and helping them continue to scale.
Okay, great. Thanks, guys. Next question is, both Bharat and AJ talked about the importance of innovation and digitalization to the success of InsureTech companies. How have the portfolio companies dealt with the lack of qualified tech talent in the industry, and how has that impacted valuations and ROI? Good question. Bharat, I'll give it to you.
Bring it on. So as I think about this question, actually, I'm not as concerned about the tech talent per se. Mm-hmm. I'm more concerned about the domain expertise. And I'll maybe give you a little bit of an anecdote, right? So we talked to a number of startups, a lot of them out of Silicon Valley, and we have almost an internal sort of a joke here. It's this: is that a tech founder trying to build something to disrupt the insurance industry, or is that an insurance industry insider who's building a tech platform? And there's a little bit of a nuance there. It's not the same thing. right? So when you have in the latter case where you have an insurance industry insider that is building a platform, that individual understands the problems and the challenges of that industry, and then he or she's trying to solve that. And to that end, yes, they need tech, but the focus is not tech. The former, where it's a tech-led business or tech founder-led business, they come at it from a tech perspective, which in many instances there's a gap from a domain perspective. I think there are numerous examples, Zenefits being a great one, which imploded. I wouldn't say imploded, which ran into a lot of compliance issues and such because they just weren't familiar enough with the nature of this industry. So the way I would answer this is I actually don't see as much of a challenge from a tech perspective. There are different challenges on the tech side, which is, can you afford that talent? How expensive that talent is? Are you able to keep them? And what the implications there are. But from an investor's perspective, for me at least, the bigger challenge that I encounter is the lack of domain expertise and industry knowledge. But AJ, I'm curious to see what your take
No,
is.
I actually agree, right? We run into several instances where the model is just fundamentally broken, right? Take underwriting, right? A lot of them focus too much on, hey, I got to gain customers and have distribution and grow the user base, but they forgot, hey, your loss ratio doesn't really make sense, right? Mm-hmm. There are companies like, let's just throw Metromile and Root out there, right? They've come a long way, and we saw their rise and their tailoring off just because you got to figure out, you have to have a working model, and getting users is very important, but at the early stage, and especially in venture investing, right, as you continue to grow. But ultimately, at the end of the day, fundamentals are going to come in play, and that's what's going to impact valuation. And as we see in the market today, but especially in InsureTech, as some of these startups continue to grow, they really need to figure out the model and the business model, right, and that you actually have a viable business going forward. Like the talent, I think it's less of a concern for us. I do think there are a lot of outsourcing that you can do abroad and have great talent and keep the costs low. We see a lot of disruptions out of Latin America and Eastern Europe that you can leverage. I think for those startups, I think the most important thing is going to be figuring out that model and really be able to execute on it.
Yep. Yeah, makes sense. Yeah. Okay. The next question that we have is, how do you recommend the best way to engage socializing an idea or a prototype with you all? And what stage of companies are you looking at? AJ, you want to take that first?
Sure. So we're Series A and Series B investors. So looking at, there's not this day and age, right? Your Series B can be $300-400 million in valuation. But broadly speaking, that's the bucket that we work in. But also because of 2021 was an incredible year for VC investing and founders, given the amount of capital deployed, the valuation metrics, and also competitiveness in the market, right? You have a lot of first-time funds that came out, and you have Tiger and SoftBanks of the world that's just ruining the late stage game. So we're trying to be a little bit more strategic with, and by strategic I mean methodical and calculated with our investments, particularly moving a little bit downstream and get to companies that are a little bit earlier than we would like in the past. But also, if we can identify the right founder, the right business model, and then if we can get on the cap table early, we can continue to do our follow-ons and then make our return that way, right? And so I think broadly speaking, within early stage investing, there is a fundamental shift to go a little bit earlier than normal, just given what's going on in the market today. Definitely.
Bharat, any additional thoughts?
Yeah, from our perspective, historically we were very similar to sort of AJ's approach, which is we were looking at primarily AB rounds and then looking to go a little earlier. But as our fund has expanded, we're now stage agnostic. So we look at everything from seed stage. So we have a seed fund that does seed stage investments all the way through pre-exit or pre-IPO opportunities. So there are multiple vehicles within our family of funds. So we depending on what stage that startup is in, we would have a different sort of protocol or different method for taking them forward. And then refer back also to our how we categorize our immediate opportunities versus what might be a little further out.
Yeah.
Now, in terms of engaging with us, so the ventures team is one of the primary inlets, I guess, into AFLAC. So if you reach out to us, we certainly facilitate conversations with the business. We can offer input, guidance. So that's a great way to do it. But that's not the only way. Our business teams have their own innovation functions. Those are great places to engage with our business teams as well, in taking ideas or sort of bouncing concepts forward.
Great.
Yeah. And Kathleen, just go back to on the engagement portion. We're open to talk to any businesses that are relevant to us, no matter what stage they're in. Part of our function is not just identifying the right business to invest in, but also the right business that potentially Assurant can be a customer of or a partner of. So I would encourage everyone on this call, if there's something that you guys want to talk about, or if there's a piece of business that's potentially relevant to Assurant, we will be the best starting place, and happy to have a quick conversation just to brainstorm on in terms of if this is a fit or not, or even from an investment perspective.
Great, thanks, AJ. The next question, it looks like a little bit more attuned to you, Bharat. In the wellness space, are you looking to engage the broker community while servicing employers and consumers thereof?
Absolutely, absolutely. So, when we think of our distribution model, the intermediary, which is the broker or the agent, still is even today is an important element in that chain. So in fact, we think of our business as having three different sets of customers. The broker or the agent is the number one, the employer is number two, and then the employee is the end consumer. Yes, all of our offerings, in fact, this past week, we actually had a broker advisory council. So we have a small group of brokers that advise us on what kinds of technologies we should be looking at and what kinds of things they would be interested in. So absolutely, in the wellness space, as well as with other sort of value-added offerings, we are very much aligned with our brokers, and many of our value-added offerings are placed through brokers.
Okay, great. Thanks, Bharat. Good, Tim. I'm going to move to the next one. Do you see other pain points in the market that are ripe for entrepreneurs to tackle? So what are some gaps that you're looking for that maybe you haven't seen yet? AJ?
That's a really tough question. There are a couple of things. I think to be a little bit more specific, right? I think workflow automation, particularly when it comes to proof of insurance, carrier integration, and also in terms of like technology around OCR and able to go through documents and pick out the right information and data. I think that's still it's a big pain point for insurance companies, especially the legacy players, right? If you have to think about a lot of our systems are home built, and then we're always trying to figure out ways to get them to talk to each other and layer on new technology to extract the data and make sense of what's going on, right? And also really try to moving from, Bharat talked about a lot of the operations still paper-based. How do we really pivot from paper-based to a more digitized platform? One thing I can think of right away is payment, right? How do we send out claims, payments for claims in a very secure and compliant way, but also in a way that we can track it and do it very cost efficiently rather than sending out via UPS and paper checks, right?
Right. Yep. Bharat?
Again, this is so I'm reminded of this this quote from, I don't know, back in the 1889. I think somebody said, everything that has to be invented has already been invented, right? So it's clearly, we know that's not true. So there's so many different opportunities and pain points and for angles for entrepreneurs to tackle. I'll name a few, but these are not exhaustive. These are not the only things. So customer engagement, we talked a lot about that. This is everything from filing your claim to understanding where your claim is in the process and getting paid. AJ talked about payments. Those are both inbound payments and outbound payments. So paying your premium and getting paid on your claims. So a lot of opportunity there in being able to refine the approaches. So making it more customer friendly, making it more user friendly. So for instance, being able to initiate a chat with a claims agent on your cell phone. And for them to be able to pretty quickly pick up, who the individual is, with some protection there for user identity and things like that. But, you're not on a phone for, 20 minutes for the claims agent to verify your submission. The other thing that I would think of more broadly from a non-AFLAC perspective, but industry, would be in healthcare. When you think of, your healthcare information or your health information, and how that is in so many different silos, and how there is no interoperability, today, very limited interoperability. So each doctor, each hospital may be on a different system, and a different backend system for recording the data. And there's, imagine how efficient it would be if you walk into an emergency room or for some procedure and they had all your information, on the screen. Not possible today. Can it be solved? Absolutely. It's a tech problem. And then lastly, when you think of more futuristic sort of problems, we talked a little bit about autonomous cars or self-driving cars. Even to just think about, get your head wrapped around, how do you underwrite a policy for an autonomous car? And what data points are you going to need? And how does that evolve over time? And by the way, even if you do not own an autonomous car, how does your risk change? Because there are other autonomous cars on the street. And so, that's another angle that could be really interesting. But those are just some of the pain points top of mind for me. Those are not exhaustive by any means.
Yeah, great. I think both of the kind of ideas that you guys put out there are really, really interesting, and definitely I see the same gaps out there. So every time I go to the doctor, they always have their own like proprietary things. All right, so one more question that we have out there is, and this is kind of related to TAG. So what can TAG do to help support the growth and gain exposure for the InsureTech space in Georgia? So TAG does a lot of things. They do education, they do sessions like this. They help with some of the, influence the laws and regulations that happen in Georgia. What are some of the things that you guys think that TAG could do or focus on that would be most helpful? I'll start with AJ.
I think Atlanta actually has a growing InsureTech community. We've spoken to a lot of companies recently. I think there's like there are a couple peer plays like Layer, Safely, My Auto, Accelerant, right? And then if you look at the infrastructure guys, Evident ID is pivoting towards insurance, Field Pro, Direct, West Hill, just some of the companies out there. I think what TAG can do is really get the stakeholders from these companies and us as well, right, together on a periodic basis. If we can have, I think knowledge exchange is one of the most valuable things, especially for VCs, understanding what's going on in our market, understanding what we can do to help out these companies as they continue to scale. I think will be critical to continue to grow this ecosystem.
Great, thanks, AJ. Bharat, any thoughts there?
Yeah, and I actually I agree with AJ. I think there's a lot more insurance activity in Atlanta. You talked about the big ones, the Safely's, the Layers, the Buckles, but also some of the fintech. So obviously Atlanta has a thriving fintech and payments ecosystem. Mm-hmm. And what we're seeing at least is a lot of those fintechs, particularly the ones that are more consumer oriented, are thinking about insurance. So there is that evolution for a lot of these fintechs and some health techs too, in thinking about how insurance plays into their business. And so obviously we all need to encourage that. Specifically to TAG, what I would love to see is, for instance, these conferences that we have, maybe a half a day focused on InsureTech, or a series of events that might be specific to that topic. That might be something that's tangible and doable.
Yep.
The other thing is maybe build obviously there's a lot of us that are part of this ecosystem that love to be able to help and offer our suggestions, advice, guidance, and certainly, look at opportunities for investment too. But so maybe, put together a mentors list or something of that sort for entrepreneurs that might be needing guidance around InsureTech and insurance. So those are some of my suggestions. But TAG, of course, is doing a fantastic job. I will tell you that.
Yeah, no, I love those suggestions. Okay, hold on. I got a couple more questions. I know we're starting to get close to time here. Andy, okay, as a student, how can I eventually get into this field when I graduate? Large company or try to go with a startup? AJ, I'll give that to you.
I'm biased, right? I would personally go with a startup because you just roll up your sleeves, you learn more, right? And with a larger company, like there's nothing wrong with it. I just think that when you're in a Fortune 500 company, it just takes like you're a very small piece of the puzzle, and then while you'll get a perspective of the market, it's not going to be as deep and not going to be as hands-on as you were if you were with a startup, right? If you're in Layer, they're going to put you to work and you're gonna learn everything about commercial insurance, right? Whereas some of the larger companies, you have to take time, and then you don't get to see the bigger picture, right? So that's just my opinion.
Okay, great. Thanks, AJ.
But you can't go wrong with either, right? But I think if it were up to me, I would start at a startup.
Great. Bharat?
Yeah, I would agree with AJ, except I would add, get yourself a mentor who's been in an insurance company for 20 years.
Yeah.
Doesn't have to be a formal mentor, but somebody that you can ask for assistance or guidance as you need it. I agree with AJ in saying that, if you're an insurance company, it's a great opportunity to get experience, but it's going to take you, 15 years before you get to that point. And in a startup, you're going to be drinking from a fire hose. I mean, that's literally the nature of startups. So you're going to learn a lot more. It's going to be a lot quicker. But you do need that, back to my point about domain expertise, particularly in these types of, complex regulated industries. You do need that mentor. You do need that somebody who's guiding you. So that's what I would do, is join a startup, but get a mentor. Yeah.
Insurance is not an easy business. It's super complicated at the back end. And there's a lot of intricacies around underwriting. There's a lot of intricacies around the regulatory agencies that you have to deal with. And even like when you go down to statutory capital and all of that, like there's many elements just behind like a typical insurance company. So it is super complex at the back end.
Just in full disclosure, I've spent 13 years at AFLAC. So take it for what it's worth.
Great advice, guys. I love the idea of the mentorship too. Yeah. And if we can figure out some way that TAG can get involved with that, that would
I think Bharat just volunteered himself.
Hey, happy to, no problem.
Excellent. All right, we've got, let's see, one more question, and then we'll try to do like a quick sort of wrap up here. So the next one was, do you measure success by metrics beyond ROI? AJ.
Yeah, for us, ROI obviously, or the IRR is one of the most important metrics to us, just because that's how they track the fund, and so that's our business. But also on our success also hinges on the relationship that we build with the startups, and what kind of information that we can share with our business units, right? Help them be aware of the disruptions that's happening in the market, help them form important relationships that can really fundamentally change their business, right? That's super important for us. If you look at our fund, it's $150 million in the grand scheme of things, right? And Assurant has multiple billions of dollars, and AFLAC probably have like 10 times as much as that on the balance sheet. So for us, it's a combination of our IRR as well as the strategic insights that we create for our business units.
Great. I love that. Okay, Bharat.
Yeah, I would agree with AJ. I mean, so we actually think of, so there are different sets of metrics for each part of our business, so the investment, innovation, and incubation. But focusing on the investment side of it, we have a couple of categories of measures. So number one is activity metrics. So this is about how many deals we saw and how many events we attended and how many startups we spoke to and so on. Very easy to measure, very, very visible metrics. The second tier, and this is probably the most important, is ROI or IRR. Anyway, you measure the return on your dollars invested. And then the third bucket, which is for us the most difficult to measure, is the strategic value. Of what is the strategic value that we bring to the business? What is the strategic value that we bring to a startup? And can you really track that by how much the sales went up or how much profitability went up or whatever? And it's very difficult to do because at any given time, a large company like AFLAC or even Assurant would have 20 different initiatives going on. How do you isolate what impact a particular startup had? In some instances, it's possible. Many instances, it's not. So we sort of defer to other types of strategic measures. Every project we do, every POC we do, every conversation that we have with a startup, we're always asking the business, what did you learn from this? Well, what did you gain from this interaction or this POC or project? And let's capture that. So we document that, we capture that. And so that's really it's an indirect measure. It's not a tangible hard number, but that's the best way that we've found of demonstrating strategic value.
Great. Yeah, no, I think that's great. All right, we've got 3 minutes left, so we're going to go ahead and wrap up. I think there's one other question where someone said, hey, what's the best way to stay in contact with you or reach out to you, LinkedIn or email? Of course, you can always join the Fintech Society or get involved with TAG as well, as we're starting to focus more on InsureTech. But AJ and Bharat, any other contact information you'd like to share, that's up to you.
Yeah, LinkedIn is great. LinkedIn is perfect.
Yeah.
Please drop a note and happy to connect.
Okay.
Same here.
Great. Well, thank you, everybody. Again, take a look at, we've got some additional sessions coming up in different forums that I announced at the beginning. I think a lot of the details are in the chat, but you can also go ahead and look at the TAG website as well. But thank you all for joining today. I think this is a great session. And thank you so much, AJ and Bharat. This was very insightful.
Yeah, it's our pleasure. Thank you so much.
Thank you all.
Bye-bye.